right? So the scenario is going to be not this one. I think yeah. So this is the document which we have seen yesterday. So on 1/10/2013, imagine that we have purchased raw material on 45 days credit term, right? So at the time the exchange rate is going to be 60 rupees against 1 USD, right? So raw material account debtor to vendor account when you purchase material. So 100 USD if you are paying 100 in US dollars, 100 USD, and the purchase price is going to be 6,000 rupees, right? That will be booked into the books of accounts on 31st of October, right? That is at the every month end, every company will evaluate their assets and liabilities at the month end, right? And company need to assess its liabilities and assets as on at the end of every month, because every month end, see, whenever an ERP is implemented like SAP, every company would like to have their financial statements on the table of the head of the organization, because when a software which can provide the financial statements every month, every company will prepare it, right? So at that time when we are going to assess its liabilities and assets, right? And this is a liability. Now what is my liability as per the books of accounts? As per the books of accounts, it is going to be only 6,000 liability. But if you are going to consider the future liability into consideration, that is that today's the exchange rate is 63 rupees, that is on 31st of October 63 rupees, and I need to consider that the increase in the foreign currency exchange rate. So that's why what I need to do is, since this is going to be loss, in case if I am going to pay today to the vendor, I'll be incurring 300 rupees more. That should be posted to loss on foreign currency valuation, right? Loss on foreign currency valuation. Since we have not yet paid, but in case if you pay, we call it as convention of conservatism. Nothing but, even though we are not going to make the payment now, but in case if I'm going to make the payment, what is my liability? That is what I'm going to consider in my books of accounts, right? And so that's why loss on foreign currency valuation unrealized account debtor to balance sheet adjustment account. So balance sheet adjustment account, since this is going to be reversed on first day of the next month, right? This will get nullified. So since the foreign currency valuation loss is unrealized, that is not realistic, this is only on book, that's all, right? We need to reverse the above entry on 1st of November 2013. Reverse entry is 1st November is balance sheet adjustment account debtor to loss on foreign currency valuation, same, right? Exactly reverse. But on 15th of November, payment of 100 USD is specified. We're going to make the payment to vendor account debtor to bank, right? So vendor account with 100, but in order to buy this $100, I need to shell down 6,500 US dollars, sorry, INR. So that's why bank account, it is created with 6,500, but originally vendor account is showing 6,000, that will get nullified. The extra 500 rupees is going to be posted to debit loss on foreign currency valuation realized. This is actual loss, that is realized loss. This means realized loss, 500 rupees, right? So this is the entry. Now let us see how system is going to post accounting entries and how we are going to configure it. and gain or loss, gain on foreign currency valuation and gain on foreign currency valuation, realized and unrealized. Based on the exercise whatever we are doing, now you need to do sales entry also, exactly the reverse, right? And loss on foreign currency. Now since we are making payment, so loss on foreign currency valuation, realized and unrealized. These are the two things it will work out for us. Okay, let us do the configuration part. So here you have cross company code postings, page down. So foreign currency. First, creation of GL accounts. So yesterday we have created all GL accounts, and the second is going to be configuration part. Alright, first is define valuation method. Financial accounting new, general ledger accounting new, periodic processing, valuate, define valuation methods. So here valuation methods. Here we need to define one valuation method. There are two valuation methods we can define, or otherwise okay. One is for sundry debtors or sundry creditors. For both line item wise valuation we have to do it. Say for example here in this scenario what I told you, only one line item we have taken, right? That is one purchase of raw material. Similarly, I'll be buying different types of raw material or assets or anything from any number of customers and belong to foreign customers other than our regular purchases, right? That is by paying foreign currency, and foreign currency may be not only USD, GBP or any currencies, any number of currencies it may be. So all those things line item wise, even in one vendor account I may have several line items, right, with foreign currencies, right? So that's why what we need to do is we need to define a foreign currency valuation method. 1 minute. Define valuation method, define valuation areas. Okay, let us go to new entries. Valuation method. So this valuation method, what I need to do is I'll define foreign currency valuation for sundry debtors and sundry creditors, because line item wise valuation I need to do. Let me valuation method for customers and vendors. Foreign currency valuation method for vendors and customers. So this one what I will do, our company code Dr. Reddy Labs DRVC, that is vendors and customers. Here there are certain methods are there. Lowest value principle, strict lowest value principle, always evaluate, revalue only. Select always evaluate, right? Always evaluate means whether the foreign currency valuation is less or more, right? Whatever it may be, we need to always evaluate. Lowest value principle means in case if the foreign currency is lower than the value at which we have purchased, that is lower than the current, then only it will evaluate lowest value. Strictly lowest value means if it is last year, last time when we evaluate, it is already lowest value. Strictly lowest value means it is lower than the earlier lowest. So like that, some certain principles, certain methods are there, but just forget all those things. Select always evaluate. Always evaluate means whether there is increase or decrease in the foreign exchange, whatever it may be, irrespective of that, you evaluate our foreign currency valuation. That is what we are selecting. We can select groups of vendors. Okay, complete this first one. Post per line item. So I want the system to identify for every line item, right? Every line item wise foreign currency, not say for example, say this is line item vendor, this is $100. Another vendor $200, another vendor $400. Like that, different line items will be there. It is not the valuation all dollars put together only one. Total put together say $1,000 valuation. It is not like that. Each and every line item, right? Line item wise evaluation I need. So that's why here what we need to do is post per line item. Then document type. So what is the document type that you are going to use for evaluation? Because after evaluation, system is going to pass accounting entry, right? See, this is the accounting entry. First time raw material account data to vendor when he purchased it, and say 300 rupees loss on foreign currency. This is the entry posted by system automatically. For that, system is asking which document you are going to use. We use SA document, right? Here you have all the documents. Select SA. And group vendors, no, not required. Group vendors or group customers, if you are going to create a group, again you have to do some other configuration. GL valuation balance, this is not required. Exchange rate type for debit balance or credit balance. Let us take M, that is average value. Now here, determine exchange rate type for account balance. Determine the exchange rate type from invoice reference. Means we are telling to the system, because vendors and customers are there. For this purpose, we are asking the system exchange rate determination, exchange rate type from invoice reference. You take the exchange rate type, the type of exchange rate is going to be, you take it from the invoice reference, because whatever the foreign currency we are evaluating, right, you take the foreign exchange rate that has been defined for that line item. Exchange rate type from invoice reference. These are the parameters we need to define. Save it. I'm creating another request. FC valuation DRLB. Here certain different methods also we can use. Bank buying rate, bank selling rate, exchange rate type for debit balance. Right, in the node, let us check here. Here always evaluate exchange rate type for invoice reference. Say here exchange rate type for debit balance, exchange rate type for credit balance. We can use B or G. B means bank selling rate, G means bank buying rate. Right, exchange rate type for debit balance, bank selling rate. Say here exchange rate type for debit balance, I can take instead of average, this M is average. I think we have used this one. See, if you observe here, M standard translation at average rate. So because in a month there will be so many transactions, I'm going to take the average rate because of our convenience. Generally we do take average rate. If you remember in the beginning when we have posted accounting entries with foreign currency, we have taken M only. That is M is average rate. Right here, exchange rate type for debit balance. Here, exchange rate type for debit balance, you can take B, that is bank selling rate. What is debit balance? Debit balance means here exchange rate type for debit balance and this is credit balance. If it is debit balance, right, bank selling rate means, say for example, debit balance means the amount which we are supposed to receive from the customer. Right, the debit balance is because if you take up customer account will be always shown the debit balance only because the amount to be received from the customer, that is outstanding amount. And exchange rate for credit balance means that is for vendor account. So in case if it is a debit balance, you can take bank selling rate. Right, so selling rate means say the amount which we are going to receive from the customer, that can be valuated at bank selling rate. Because once we receive US dollar from customer, we are going to sell it. So at what rate I have to sell? Here I am taking average rate, right? Rather you can take here bank selling rate, or if it is a exchange rate type for credit balance, then you take bank buying rate, right? Because whatever the rate the banker is going to sell, at that rate we have to buy it and we have to pay to the vendor. Right, here I have given B and G. In case if you are getting any confusion with this, just don't worry, you take only M. That's why I'm taking M here. Right, save it. Okay, and here the two exchange rate type for invoice reference. Here determine exchange rate type for account balance. When this is going to be considered, this is going to be considered in case if you are evaluating, say for example, we have taken loan from a from bank. Say for example, a loan in US dollar. Now, after 1 month, I am going to evaluate my loan. So $1 lakh I have taken on 1st of October. On 31st I am evaluating. So on 1st of October, what is the value? That is exchange rate. On 31st of October, what is the exchange rate? Now the differential exchange rate multiplied by, right, 1 lakh will give you the loss or gain of the that what you call type of the account balance means the bank loan. So bank loan, on bank loan, whatever the exchange rate difference from the beginning to the end, that is beginning of the month to end, right, the differential amount is going to be loss or gain on account of foreign exchange loan that has been taken from the bank. Every month I need to evaluate that also, right? So here now we are not concerned with that. Presently we want to value customers and vendors. For customers or vendors, both same. Right, here if you select this, that's why I'm defining only one rule for customers or vendor. Come back. DRVC, this is the rule that we have defined. Next, define valuation areas. Valuation area, I'm going to define a 2-digit valuation area I need to define. Right. So what is that 2-digit valuation? What I will do is go to new entries, valuation area or company code is DRL. I am taking, say for example, D1. Valuation method, whatever we have defined, DR VC is the valuation method. And the currency type is nothing but company code currency, because this valuation we are asking the system to evaluate for the company code currency. That is, if US dollar is taken or GBP is taken, whatever it may be, the valuation by default should be converted into the company code currency, whatever the currency it may be. So that is what we have defined here. Save it. Then what is the importance of valuation area? This you'll understand later, not now. Right? Just I have defined a valuation method, and that is linked to one valuation area. This is valuation area D1. Come back. Check assignment of accounting principle to ledger group. And here what I need to do is check assignment of accounting principle to ledger group. See, ledger group we need to have ledger. Okay, before we do these two steps, this is not required, this has to be done. And here I'll tell you one thing. In financial area, the financial accounting, ledgers, define ledger for the general ledger accounting. One thing I need to tell you here, that is nothing but, see here, there is a 0L ledger, that is the standard ledger provided by the SAP system. See here, 0L ledger, that we call it as leading ledger. 0L is a leading ledger. By default, whenever you define a company code, a leading ledger will get defined for that company code. Now, whatever the company code that we have defined, for that by default, your leading ledger is going to be defined. That is 0L ledger, that is called. Right, that we don't know, we don't observe, but because time has come, just I'm explaining you. 0L is a leading ledger. What is leading ledger? Then is there any non-leading ledgers? Means yes. This is leading ledger, and we are going to have non-leading ledgers also. That I'll explain you when we go to the new GL concept. New GL. See here, 0L is leading ledger, and L1, L2 we can define as non-leading ledger, NLL1, NLL2, non-leading ledgers. So what is non-leading ledgers? What is leading ledger? Right, we'll discuss later. But now for the time being, let us understand the standard ledger that is going to be linked to every company code is leading ledger, 0L. Right. So that leading ledger and all your sundry debtors, sundry creditors, ledgers, subledgers, everything is linked to this. Why I am explaining you this? See, this is, and the table in which the data is going to be stored is FAGL FLEXT. What is this? This is table. Table means in SAP the total data is going to be defined in tables. In fact, that is the technical requirement. ABAPers know what is meant by table. There is a T code called SE11. SE11. Press enter. Any table you can see here. Right here, FAGL FLEXT. Paste here. That is database table. That is, this we call it as total table. Click on display. Means the new GL data is going to be stored in the table. So not only that accounting data, everything is going to be BSEC, BKPF. See, ledger totals. All ledgers. Here if you click on this, the total data is visible. And similarly, there are 1 minute. Here BSEC. BSEC is nothing but a table name in which data is going to be stored. What data? Accounting data. Accounting data is going to be stored in SAP tables. And because see, where the data is going to be stored, for every software there will be some way of storing the data. See, accounting document segment, BSEC. And if you click on this, you'll get Bookers. This is the technical name for the company code. Right here, say for example DRLB, execute. Our data, total data is stored like this. Technically, the data is going to be stored. Every data is going to be stored here. This is the line item 1, line item 2, year. Right here, business sales. And if you just double click on that, for each line item, see data is stored like this. In the fields, whenever you post an accounting entry, system create with all this table, with all these fields, whether you enter it or not, system create this. That's why a lot of space is going to be wasted here. In case of ERP, it takes a lot of table, because for every line item, I don't know what line items I'm going to use, what information I'm going to store. That's why for each and every line item, total structure is going to be created here. And where the amount is required, there the amount will be posted. That's all. All other things, see here, so many fields are taken, but is a, of course, if you are not going to use it, that will be wasted. The space is wasted. That's all. Like this, the total information is going to be stored in this table, this kind of tables. Now come back. So this FAGL is also a table in which the GL, general ledger accounting information is going to be stored. Now define currencies, activate, and one thing here I need to tell you one more thing. Define accounting principles. If you are configuring your SAP system for US accounting, you have to define your US accounting principles like US GAAP. If it is going to be UK, then you are going to define accounting principles as per IFRS, that is International Financial Reporting Standards, now which is going to be mandatory for all countries. There is a uniform accounting standards have been defined by the IFRS board, right? Because accounting standard is means what? Every country will have their respective accounting standards. That is nothing but as per the country's requirement, the system of accounting is going to be defined, right? Whether how to valuate your foreign currency, what are the principles, how to valuate your inventory, because what is at cost or market value, whichever is less, that is Indian way. US GAAP, some other principle, IFRS, some other principles, JAS, Japanese accounting standards, Chinese accounting standards, right? Like that, different countries will have different accounting standards. Now globally, all these accounting boards have come together and they have announced IFRS, that is International Financial Reporting Standards. Till now I think 9 or 10 accounting standards have been issued, and the rest of the standards are being under processing. Now every country must and should follow this International Financial Reporting Standards apart from your local accounting standard. So even in India, we follow Indian accounting standards as well as International Financial Reporting Standard. Even US also is going to follow only IFRS from 2014 onwards. Until then, they are following US GAAP, that is United States, right? US GAAP, GAAP means Generally Accepted Accounting Practices, right? So those things the US is following. Now why I'm telling you this, define accounting principle. So for your country's accounting principle we need to define, then that need to be linked to the respective ledger. Right here I need to define my accounting principle. Right here, see GAAP, Generally Accepted Accounting Practices, USA, nothing but US GAAP. IAS, International Accounting Standards, right? LOGA means local GAAP. So what I will do, I'll define my own Indian accounting standards. Indian accounting standards. First I'm defining this, right? Once we define this one, assign accounting principle to ledger groups. Assign accounting principle to ledger group means here ledger group I told you 0L. 0L is the standard ledger, leading ledger. What I will do here, go to new entries. My accounting principle is right INAS. Drill down that. Target ledger group. 0L. Because 0L is the standard ledger for my company code. So here what I am telling to the system, I am going to follow Indian accounting standards to the 0L. I told you that by default 0L has been linked to my company code Dr. Reddy Labs. Now I'm going to define one Indian accounting standards principle, right? Okay, how this is going to be linked to our foreign currency valuation, I'll tell you now. Here, right, check accounting principles to the ledger group. Now here, see INAS has been linked to ledger group 0L. Achha, one more thing here, this is 0L is leading ledger. I can create non-leading ledger, ledger 1, ledger 2. And in case if my company code has to report my financial statements in 2 or 3 different accounting standards, it may be required. Say for example, in case if I am going to say raise my finance through US stock market, say for example Dr. Reddy Labs, literally Dr. Reddy Labs, they have raised their funds from US market and also European market, right? And that's the reason what Dr. Reddy Labs has to do. They have to submit their financial statements not only in India, they have to submit their financial statements to SEBI. SEBI, that is in India, and in US SEC, that is United States SEC, Securities Exchange Commission. But how they have to submit? Again, they have to prepare their financial statements in US dollar as per the what you call calendar year. They have to prepare it. So here we have that we are going to discuss in new GL, that is leading ledger, non-leading ledger, etc. There, depending upon my country's reporting requirements, I can have any number of ledgers. Each ledger can be prepared as per the different accounting principles. But now I'm going to assign my Indian accounting standards is going to be linked to the main leading ledger. Leading ledger is linked prepared as per the Indian accounting standards. That has already been defined there, and here also appears the same. Now assign valuation areas and accounting principles. Assign valuation areas and accounting principles. Now this valuation area, whatever we have defined, right, that is D1 we have defined. Here go to new entries. What is my valuation area? We have defined D1. D1. D1 is already linked to my valuation methods, DRVC. So whatever the principles that we have defined in DRVC are linked to valuation area D1. Now D1 is linked to my accounting principle. My accounting principle just I have defined Indian accounting standards. So my valuation, stock valuation, I can define something method that will be linked to INAS. Like that, any requirement as per the country's requirement, Indian accounting standards, I can define that and link it to that country's respective accounting principles. Now INAS has already been linked to your leading ledger 0L. In turn, the foreign currency valuation, whatever we have defined, right, that has been linked to DRVC. DRVC is linked to D1. Now D1 is linked to Indian accounting principles, INAS, and INAS has already been linked to 0L. INA is linked to 0L. Now, whatever the financial statement that you are going to prepare as per the 0L, there is a leading ledger, right? That will be prepared as per Indian accounting standards. So every principle we need to create, and that should be linked to the accounting standard, whatever you are going to define. So in that way, your valuation principles are linked to the accounting standards, and accounting standards are linked to the concerned leading ledger, right? Of course, I know that it is difficult to understand at the first instance, but you need to define and you need to look into it once again, so then you can understand, right? So here we have defined valuation method. Valuation method is linked to the valuation area. Valuation area is linked to the accounting principle, and that has been linked to the valuation area and accounting principle are linked to each other here. So one part is over. Now coming to the foreign currency, prepare automatic posting for the foreign currency valuation. So here I told you that accounting entries are required on every month end. Every month end, my liability, whatever it may be, that has to be booked and reversed. I'll be posting few hundreds and thousands of line items. All those things valuation manually just impossible for me. So that's why all accounting entries I cannot manually post. I want automatic posting of entries. So for that purpose, I need to make automatic postings for foreign currency valuation. So here in OBA1, I need to make the settings. Exchange rate difference, open items, and GL account. Here, double click on KDF. KDF is nothing but transaction key. Transaction key or accounting key, we call it as transaction key. Whenever there is a transaction key, I told you, it should be linked to GL account. Now, double click on this line item KDF. It will ask you which chart of account you are following. DRCA. And go to new entries. Right. Now here, two things. Number one, we are going to evaluate, say, company code DRLB, and the GL account is going to be, so here I'm going to buy raw materials. So we have anyway raw material vendors are there for us. So here this is what I will do. Material vendors. I'm taking here GL account, material vendors. Currency type you need not take now. Now exchange rate difference realized. Right. Already we have created GL account for exchange rate loss or gain, realized and unrealized accounts we have created. So here loss and gain realized. System is asking me, okay, to which account you want me to post if it is going to be realized. Realized means at what stage we post realized entry. A realized entry is going to be posted when, since the foreign currency valuation loss is unrealized, we reverse it. That is over. Now say on 15th of November, payment of 100 USD is due. When we make actual payment to the vendor, right, the loss or gain is going to be realized at this stage. So here loss. Similarly, in case of say customer sales, etc., it is going to be gain. Even in case of vendor payment also, you'll have a gain if foreign exchange, that is exchange rate, reduces. Say for example, here exchange rate at the beginning, say 60 rupees. Subsequently it got reduced, say to 55. In such case you get gain. So at that time I want the system to post the gain. So loss or gain realized should be posted too. We have already created the GL accounts here. Foreign currency valuation realized. Right, this is gain, loss or gain. So realized part, loss or gain. Say realized. Gain on foreign currency, this we have created. Right, gain should come here. Loss. Loss on foreign currency valuation realized. Both I am taking, remember here, realized. Here I am using some symmetry, 505, 105 like that. Now if this is realized, realized loss, realized gain. Similarly here, loss or gain, unrealized. Loss or gain, unrealized. Unrealized gain, first 306. Gain, unrealized gain. Unrealized loss, balance sheet adjustment account. So we have already created balance sheet adjustment account. See balance sheet adjustment account 200 710. Got it? Leave below, don't touch anything. This is sufficient for us. Exchange rate difference realized, valuation. Okay, save it. Okay, now this is for the purpose of vendor payment. Vendor payment, in case of when you are dealing with vendor payments, any loss or gain on account of foreign exchange will be posted to these accounts. Now what about customers? Come back, not come back, rather go to new entries again. Now sundry debtors, in case if you are going to make sales and there is a foreign currency, so now same exactly the same scenario whatever we have discussed here. Right, here we are taking vendor. Instead if you take customer, on 110 we made the sale and exchange rate is going to be increased, then in such case you are going to get gain on the sales. So that's why in case if you are going to uh, bring out the foreign currency valuation on customer sales, you have to assign these accounts. Say my sundry debtors account is 200 301 sundry debtors. Right, 200 301 sundry debtors domestic customers or sundry debtors foreign customers. Okay, so whatever it may be you can take. And same exchange rate realization, same GL account you can take here. Right, save it. So here the configuration has been done with. One minute. Just give me a second. right? So this is these two GL accounts for sundry debtors or sundry creditors. We have defined the valuation rules, and account assignment has been done here. Automatic account assignment, right? This is done with. Okay. Come back, right? Define account determination for foreign currency translation. This is okay. This is not required now. This is not required. Right. This is sufficient for the time being. Right. So the configuration part is over. Right. Configuration part is over. Now what next we need to do is we have to post the accounting entry for this one, for posting the purchase of raw materials. Okay. Purchase of raw material. Okay. Acha. Next what we do is we enter the foreign exchange rate. So here what we need to do, in order to exchange enter the foreign currency, let us define your translation rate. At what rate we have to evaluate. So here, as per our requirement, what it told you is on 110 raw material is purchased at 60, and on 31st of October it is going to be 63, right? Now first what I will do is I'll post the accounting entry on 110 with old date. I'm going to post vendor invoice. This is right. Accounts payable document entry F-43 on 01/10/2013. Company code DRLB, currency rate currency USD, right? USD. At what rate we are going to buy now? Say at the time of making payment I need to define at what rate I'm going to buy, right? 60 rupees. So 1 USD is equal to now 60. ABC raw material vendors 400 501. Exchange rate 60 deviates from the table rate of 66 9.9. Okay, already in the table 66 has been defined. Okay, now here what I'm doing, 100 US dollars, right? Let's take just only 100. So test for foreign valuation. So vendor account is credit, then raw material account should be debited. So raw material account 40, 200, 400, not 400, 200, 201. Sundry creditors, current assets 200, 201, inventory of raw material, right? Inventory of raw material account data, raw material is received and vendor account is going to be created. So debit raw materials account 100, say 6,000 rupees, right? So 100 USD, 6,000 rupees. Over you, 100 USD, 100 USD. Save it. You want to see the document? Display, right? 100 USD. 100 USD if you want to see. Display currency, 6,000. Okay. So let us stop here because again lot of process is there after posting the accounting entry, right? We need to evaluate the valuation process is there. We need to execute one cycle. So that's why let us take up this one right tomorrow. Tomorrow we'll complete this and we'll start another new topic.